Everyone, and welcome to tonight's contender stream. We have a very special stream prepared for you tonight, and we're going to be covering the topic of surviving your first 3 years as a trader. The disclaimer, take a second to read it, please. As usual, there's no financial advice on our streams. It's just for educational purposes. And let's get on with the stream. The inspiration for the stream came to me because I've often thought about if I could travel back in time, like Back to the Future, what would I tell myself, the beginner trader, with the knowledge I have now? Like, how could I help myself? What tips and tricks could I give myself about how to perhaps avoid some of the most painful mistakes? I mean, some have to be made anyway, but just to ease along the learning process and help me become a profitable, consistent and profitable trader a bit faster and with less pain. And I thought it would be, or we thought it would be a good idea if instead of just sharing, my suggestions and tips and tricks, that we provide extra input from my very special guest tonight. So please welcome our beloved coach, Magic Mike. Welcome, Mike.
Hello, good evening, everybody. Hey, hello.
Welcome to the stream. So
Thank you.
Now we have a double camera setup going on. This might kind of beat up what this stream upload can handle. So it might be that the stream is a bit laggy. Don't worry about it. The video will be uploaded in full quality to the website, and you'll be able to watch all of this in detail. You can also just try to pause the stream, give it a couple of minutes head start, and then it should stop lagging. So let's get started. The first big topic that we're going to be talking about is damage control. This is supposed to summarize what can you do to keep your capital in your account and not on the exchange or on liquidation fees or on any other catastrophic events that might happen at the beginning. Then we're going to be moving on to tips and tricks. What things could you do to, especially in the beginning? We now have a lot of newer members that are taking their first steps in trading, and some members that perhaps already have some experience, but are trying to sharpen their skills to become more consistent and profitable without taking huge losses or without taking emotional trades that destroy the profits that have been made over longer periods of time, which is, of course, extremely frustrating. And then on the third section, we're going to move on to questions and just see what questions you guys might have about the topics that we're talking about today and about what we explained to you. So, first topic, damage control. I thought this picture was fitting because it represents a total nuke of your account. Basically, the well-known liquidation, which happens on a daily basis on the exchanges. And you can see this, of course, on Exo charts perfectly. The little bubbles, red and green, or whatever color you've picked, that show you that shorts get wrecked, longs get wrecked, shorts get wrecked, longs get wrecked, and it just keeps happening over and over. And that's something you should definitely avoid. You should not be using your liquidation as your stop loss. You should be using a proper stop loss, and the liquidation price should be very far away from it, because it will take you a lot of time and extra capital, of course, to recover all those losses. So one of the first things that I wanted to mention, or that we wanted to mention, was learn to swim with low leverage. And the reason that I'm bringing the swimming analogy in here is because if you're learning how to swim, are you going to do it at the deep end of the pool or at the shallow end? Obviously, you're going to start at the shallow end because you don't want to drown. So this, if you compare it with using leverage, if you're using no leverage, you're at the shallow end of the pool. And as you increase the amount of leverage that you're putting into play, then the pool is getting deeper and deeper. So if you're using 100x, you're at the very, very deep end. That means that if you don't know how to swim very well, you might drown, or you will probably drown. So in this case, it would mean that you're basically destroying your account. just because the leverage is too high and the account cannot take the amount of pain that comes from taking one simple trading loss, which is also part of the game. They're unavoidable. So what can you do? Start small, but think big. Very often we say, hey, just take a small amount of capital, whatever your total capital is. Maybe start with 1% of it or 5% of it, something that's definitely not going to hurt you, something that's not going to keep you awake at night worrying about what trade you might have open or whether your stop loss gets hit or whether your take profit gets hit. So start with small amounts that are fitting to your account, but think that you are only doing this to warm yourself up, basically. Think about the big goals that you might have in 1 year, 2 years, 3 years, 5 years, 10 years. That's how long the markets are going to be around and much longer. So there's no rush. There's no need to go full YOLO on your first trades, on your practice trades especially, and burn all of your capital. So just start small, make small goals, and that way you will control the total amount of damage. Because even if for some reason your trading system is not up yet, working properly, you'll still be able to save your capital because you've only been using 5% anyway. So you can, try again with another account. And to summarize damage control, your best offense is a good defense. What does that mean? Well, of course, it's a football analogy. Yeah, I guess many of you watched the Super Bowl a few weeks back, and you saw that the the Chiefs got shut down badly because the defense or the defensive line for Patrick Mahomes, for the Chiefs quarterback, was horrible. They could not hold back the attack from the Buccaneers offense. So offensive line. So basically, that quarterback had no time to throw his passes. He had no time to plan his passes and execute them properly. So he was being rushed. He had a bad coverage, and he made very poor decisions because he was forced to do so. So you have to put yourself in a position where you're not like Patrick Mahomes getting hammered and sacked all the time. You actually have to be properly defensive to give yourself enough time to react to what the market is doing, and of course to not take a sack, but actually to have your chances to execute the trades, which means you keep your risk management tight. You risk a low percentage of your capital per trade, and that allows you to keep playing. Instead of focusing on one game and one pass and trying to go for that Hail Mary touchdown pass, you want to play 100 games and you want to throw many passes. But in order to keep doing that, you have to have some capital in this case to keep entering each game, to keep playing each game. So comparing it to the casino again, it would be like throwing a quarter in the slot machine. Those quarters are the fees to keep playing another round, another round, another round. So you have to be very defensive about it to be able to do that. What do you think about this, Mike? So far?
Yeah, I think there's a lot of value in what you're saying, and I do agree. Damage control, in other words, risk management, encompasses multiple concepts, I would say. Risk management is very key, and this does not only necessarily apply to, let's say, your position size, but it also applies to stop loss placement, and especially the leverage thing. And this is, I'm going to say now something that I've been preaching really for quite a long time now, I would say, is risk management is, focus on executing. First, learn how to execute trades well. Do not think about the money. If you do not think about the money, you also have no need to use leverage, because why would you use leverage? Have an excessive amount of risk. Also, still, if you even learn the whole mechanic of actually using leverage, it doesn't make sense to use leverage. Just trade with what you have, and then from that, risk only a small percentage, because you're not going to be able to make any profits as long as you do not understand how to trade or even how to manage your risk. Ultimately, your risk management is to outlast your losses, so to speak. So I would say I would never focus on actually making money, or, you know, using leverage to make more money than you actually have available for risking. Because in my opinion, that is a very wrong way of using leverage. Leverage is useful for other things, like if you have multiple accounts and you are going through the formula that, you know, we cover this in the beginner section of the learning modules as well, in the trade size video. There's like an exact formula how you can calculate your risk. So let's say you have a $1,000 account and you're only willing to risk $10 on each particular trade, right? Well, if you do it like that, let's say if you have a stop loss, even if your stop loss is 30% wide, then there's this formula explained in that particular video that even if your stop loss is so far away, you still have the correct position size, that you're still losing that $10, you know? And basically, if you're learning, that is super important. If you keep your risk management in place, like Victor already said, you can make 200 losing trades, and still, with just a few really good trades, you can make it all back again. If you risk too much at one time, it is very possible that out of nowhere, you're literally overnight, you're losing, let's say, 50 or 60% of your account size. And, you know, it's extremely difficult to come back from that, even if you do a few successful trades. So, you know, I would say the whole point of managing risk is not necessarily to take it even one step further. The whole point of managing your risk is not even to limit your losses, but actually to buy you enough time to learn from those mistakes until you learn it, until you're able to actually become profitable, and then, you know, the money will come automatically.
Yep. Very nice. Totally agree.
That's what I would say about risk management.
Sounds good. So then let's move